New York. In what traders are calling a defining moment for the metals market, the London Open today sent a powerful signal across global exchanges. Silver, Aus, real value may no longer be suppressed by short-term speculation or institutional pressure. As the trading session began under the benchmark pricing mechanisms of the London Bullion Market Association, LBMA, silver prices reacted sharply, igniting conversation across U.S. financial media, Wall Street trading desks, and social platforms. By mid-morning in New York, hashtags related to silver pricing, the London Open, and LBMA activity were trending across American financial communities. Retail investors, hedge fund managers, and commodities analysts alike were dissecting what many described as an unmistakable breakout signal. The London Open has historically served as one of the most influential price discovery windows for precious metals. While New York's COMEX futures market often drives volatility, London's physical spot market sets a tone that institutional players closely monitor. Today's Open wasn't just routine volatility. Within minutes of the opening session, silver showed unusual buying pressure, outpacing gold in percentage gains. Analysts point to a combination of elevated industrial demand expectations, ongoing U.S. inflation concerns, rising geopolitical uncertainties, and increased retail accumulation. But what truly caught attention was the scale of physical demand indicated in early trade flows. Something shifted, said one New York-based metals strategist. This wasn't just algorithmic trading. There's evidence of real physical positioning. For months, U.S. investors have debated whether silver has been undervalued relative to gold. The gold-to-silver ratio remained historically elevated, suggesting silver might have room to catch up. Today's move amplified that theory. In the United States, silver holds a dual identity: precious metal store of value and critical industrial metal. With America's renewable energy expansion, electric vehicle manufacturing, and the semiconductor production growing steadily, silver demand fundamentals appear stronger than ever. Solar panel production alone consumes significant silver supply. As federal infrastructure and green energy programs expand, analysts believe physical demand could tighten global inventories further. Social media investment communities across the U.S. lit up after the London Open data circulated. Veteran traders recall the retail-driven silver momentum episodes of recent years, but today's activity appears more structured. Unlike speculative spikes fueled purely by online campaigns, today's momentum is supported by strong ETF inflows, increased coin and bullion sales, institutional accumulation signals, and technical breakout confirmations. Major bullion dealers across the United States reported elevated online traffic within hours of the London Open. One Chicago-based dealer noted, "We saw a 40% jump in inquiries before the U.S. market even fully opened." The role of the London Bullion Market Association cannot be overstated. As the central hub for global precious metals over-the-counter trading, LBMA pricing influences billions in contracts daily. When unusual order flows appear during this window, institutions pay attention. Today, a signal suggests that supply tightness in the physical market may be more significant than previously reported. Several analysts speculate that vault inventories in major global hubs are under closer scrutiny. If confirmed, this could reshape price expectations for Q1 2026. In the United States, economic data over recent months has kept inflation concerns alive. While policymakers maintain cautious optimism, many investors remain skeptical about long-term purchasing power. Silver, historically viewed as the people's hedge, tends to benefit when trust in fiat currency weakens. Unlike gold, which is often dominated by central bank demand, silver is more accessible to everyday investors. That accessibility is part of why today's movement resonates strongly across U.S. retail markets. Beyond monetary policy and inflation fears, silver's industrial utility may be the hidden engine behind today's surge. Silver is critical in solar panels, electric vehicles, 5G infrastructure, medical technology, and defense applications. With U.S. manufacturing incentives encouraging domestic production, silver demand forecasts continue to rise. If industrial consumption accelerates while mining output remains constrained, price discovery could shift dramatically. Global silver mining growth has been relatively flat in recent years. Environmental regulations, labor challenges, and declining ore grades have pressured supply chains. Many silver mines operate as byproduct producers tied to base metals like copper and zinc. That means silver output does not always respond directly to silver price changes. If demand accelerates rapidly, supply may struggle to adjust in time. This structural imbalance is one reason why analysts say real value can be hidden forever. From a technical analysis perspective, today's London Open movement broke through key resistance levels observed over multiple months. Chart analysts note higher highs formation, strong volume confirmation, bullish momentum divergence, and moving average crossovers. When physical fundamentals align with technical breakouts, momentum can compound quickly. As New York trading progressed, silver futures reflected London's bullish tone. Volatility increased, but buying pressure remained dominant through the morning session. Major financial networks in the United States began covering the move as a developing story. Wall Street firms are now issuing updated outlook notes, with several adjusting short-term price targets upward. The critical question for U.S. investors: is this a temporary spike or the beginning of sustained repricing? Key factors to watch include continued strength at subsequent London Opens, ETF inflow consistency, physical inventory, data transparency, Federal Reserve, policy signals, and industrial consumption reports. If tomorrow's London Open confirms today's momentum, confidence may accelerate further. Markets move not just on numbers, but on belief. For years, segments of the investing public argued that silver's price did not fully reflect its industrial importance and scarcity dynamics. Today's London Open may represent more than a price spike. It could signal a broader psychological shift in how silver is valued in global markets. As of today, February 12th, 2026, silver has reclaimed center stage in American financial conversation. The London Open acted as a catalyst, exposing underlying strength that many believe has been building quietly. Whether this marks the beginning of a major bull cycle or simply a powerful short-term surge remains to be seen. But one thing is clear: when physical demand, institutional positioning, and technical momentum align, markets listen. And today, the signal from London was loud. The explosive momentum triggered at the London Open has now transitioned into a full-scale U.S. market narrative. Following strong price action during the benchmark session of the London Bullion Market Association, silver continues trending across American financial platforms, investor forums, and commodity desks. What began as a pricing signal in London has evolved into one of the most talked about commodity moves in the United States today. After clearing key technical resistance levels during early trading, silver is now entering a price discovery expansion phase. US-based technical strategists highlight strong volume confirmation on breakout, institutional accumulation patterns, and higher low consolidation above former resistance. Historically, when silver sustains strength after a decisive London Open move, follow-through buying in New York often amplifies gains. Another major driver of U.S. silver demand is Federal Reserve policy. If inflation remains persistent and rate cuts are delayed, precious metals often benefit from uncertainty. Silver, in particular, tends to outperform during periods when investors seek both inflation hedges and industrial exposure. Retail participation in silver markets is growing rapidly today. Unlike gold, silver offers a lower entry price per ounce, greater percentage volatility, and a stronger industrial demand narrative. Silver's role in the U.S. economy extends beyond investment speculation. It is essential in solar panel production, electric vehicle batteries, and semiconductor manufacturing. Industry analysts warn that if industrial demand accelerates simultaneously with investment buying, supply deficits could intensify. Global silver mining output has not expanded significantly in recent years, and if demand continues climbing, available above-ground inventories could shrink quickly. Major U.S. investment banks are reportedly revising short-term metals outlook models, framing silver as both a defensive and growth-aligned asset. If silver continues outperforming gold, it suggests investors are rotating toward higher beta precious metals exposure. Global uncertainty, trade tensions, and geopolitical instability also increase demand for hard assets. Today, silver-related keywords are trending across investment forums and financial YouTube channels. While bullish momentum dominates headlines, analysts caution that volatility remains high due to profit-taking and U.S. dollar movements. Some commodity strategists argue that silver could be entering a multi-year structural repricing phase. The significance of today's London Open lies in narrative transformation. Silver is no longer being ignored, and in the world of commodities, attention often precedes acceleration. Hello everyone, and welcome back to our channel. Today, we're diving deep into a topic that has been generating a lot of buzz in the financial world, the silver market. Specifically, we're going to explore the potential for a massive surge in 2026. We'll be looking at some key indicators, including a fascinating signal from the London Open, the dynamics of capital rotation, skyrocketing industrial demand, and what this all means for your investment strategy. So, if you're curious about where silver is headed, you've come to the right place. Let's start with a really interesting pattern that many seasoned traders keep an eye on: the London Open. For those who aren't familiar, the London session is one of the most active trading periods in the world, especially for precious metals. A signal has emerged that suggests a significant price movement for silver is on the horizon. This signal is based on historical price action and volume analysis during the first few hours of the London trading day. Historically, when we see specific patterns of high volume and price breakouts during this window, it often precedes a major trend. And right now, the indicators are starting to flash green, pointing towards a potential bullish rally starting to build momentum as we head towards 2026. It's like the market is coiling up, preparing for a big move. This isn't just random noise, it's institutional money making its early moves, and savvy investors are taking note. Now, let's talk about the bigger picture, capital rotation. In the world of finance, money never sleeps. It just moves. We often see large-scale shifts of capital from one asset class to another. For the past few years, a lot of money has been concentrated in tech stocks and cryptocurrencies. But as market conditions change and with concerns about inflation and economic stability lingering, we're beginning to see a rotation out of these high-growth, high-risk assets and into safer havens and commodities. Silver, often called poor man's gold, stands to be a major beneficiary of this shift. It has the dual appeal of being both a precious metal and a critical industrial component. As investors look to diversify their portfolios and hedge against uncertainty, silver becomes an incredibly attractive option. This influx of capital from other sectors could be the fuel that ignites the silver rocket in 2026. It has a classic flight to safety, but with a modern twist. This brings us to one of the most powerful drivers of the silver price, industrial demand. Unlike gold, which is primarily used for jewelry and investment, over half of all silver mined is used in industrial applications. And this is where the story gets really exciting. The global push towards green energy and advanced technology is creating an unprecedented demand for silver. Think about it. Solar panels are one of the biggest consumers of silver. The photovoltaic cells that convert sunlight into electricity use a silver paste. As the world transitions to renewable energy, the demand for solar panels is exploding. The International Energy Agency projects massive growth in solar capacity, and every new panel means more silver is needed. This demand is not speculative, it's real, tangible, and growing every single day. But it doesn't stop with solar. The electric vehicle revolution is another huge catalyst. EVs contain significantly more silver than traditional internal combustion engine cars. Silver is used in everything from battery connections and electrical contacts to the advanced driver assistance systems. With governments around the world setting ambitious targets for EV adoption, the automotive industry's appetite for silver is set to skyrocket. Then there's the 5G rollout and the entire ecosystem of connected devices, often called the Internet of Things. All of these new technologies rely on silver for its superior conductivity and reliability. From your smartphone to your smart fridge, silver is there. This trifecta of solar, EVs, and 5G is creating what some analysts are calling a structural deficit, where industrial demand could soon outstrip the annual mining supply. This fundamental imbalance is a powerful force that could drive silver prices to new highs. So, what does this all mean for you as an investor? How can you position yourself to potentially benefit from this confluence of factors? First, it's important to understand your own risk tolerance and investment goals. Silver can be volatile, so it's not a get-rich-quick scheme. A prudent strategy often involves dollar-cost averaging, which means investing a fixed amount of money at regular intervals, regardless of the price. This helps to smooth out the effects of volatility. You can invest in physical silver, like coins or bars, which gives you a tangible asset. This is a popular choice for those who want direct ownership. However, remember to factor in storage costs and security. Another popular option is through silver ETFs or exchange-traded funds like SLV. These funds track the price of silver and allow you to invest without having to hold the physical metal. They are highly liquid and can be bought and sold just like stocks. For those with a higher risk tolerance, you might consider investing in silver mining stocks. When the price of silver rises, the profitability of mining companies can increase exponentially, leading to potentially greater returns than the metal itself. However, this also comes with additional risks, such as operational issues, geopolitical instability in mining regions, and company management. It's crucial to do thorough research on individual mining companies before investing. A diversified approach could involve a mix of physical silver, ETFs, and a carefully selected portfolio of mining stocks. The key is to create a strategy that aligns with your financial situation and long-term outlook. Remember, the information we've discussed today is for educational purposes, and it's always wise to consult with a financial advisor before making any investment decisions. The potential for silver in 2026 looks incredibly compelling, driven by strong signals from the trading floor and an undeniable surge in industrial demand. Let's recap what we've covered. We started by looking at the London Open signal, a technical indicator suggesting that big money is preparing for a major upward move in the silver market. We then discussed the macro trend of capital rotation, as investors begin to shift funds from overvalued sectors into tangible safe haven assets like silver. This provides the financial firepower for a potential rally. The core of our thesis, however, lies in the explosive growth of industrial demand. The green energy transition, fueled by solar panels, the electric vehicle boom, and the expansion of 5G technology, are all creating a structural demand for silver that the mining supply may struggle to meet. This fundamental imbalance between supply and demand is perhaps the most powerful bullish catalyst for silver in the coming years. When you put all these pieces together, the technical signals, the flow of capital, and the fundamental industrial demand, the case for a significant revaluation of silver by 2026 becomes very strong. We're not just looking at a speculative bubble, we're looking at a convergence of powerful long-term trends. It's a story of technology, of green energy, and of sound money. Of course, no investment is without risk, and markets can be unpredictable. Geopolitical events, changes in monetary policy, or unexpected technological breakthroughs could all impact the price of silver. That's why a diversified and well-researched approach is so important. But based on the data and trends we're seeing today, the future for silver looks exceptionally bright. This could be one of the most significant investment opportunities of the decade. Thank you so much for joining me for this deep dive into the silver market. I hope you found this analysis insightful and that it gives you a solid foundation for your own research. If you enjoyed this video and want to stay updated on more market analysis and investment strategies, please make sure to hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you won't miss our future uploads. We love hearing from you, so please drop your thoughts and questions about silver in the comments section below. Do you agree with this outlook? What's your strategy? Let's get the conversation started. Thanks again for watching, and I'll see you in the next video.